Hello and welcome to another update video about ADA. Yeah, the ADA chart is still in this pattern that we discussed in the last video yesterday. So we're still dealing here with a situation in which we are in a diagonal pattern to the upside from the June 2023 lows. Have this wave 1 to the upside, a wave 2 pullback, wave 3 to the upside, wave 4 pullback. Now the wave 5 unfolding. Other interpretations are possible. This bottoming structure is a little bit ambiguous. Because this bottoming structure is a bit ambiguous, it leaves a lot of room for interpretation where actually the proper low is of the cycle. So was it here? Was it here? I have it at the lowest point. Okay. Yeah. Certain advantages, disadvantages, so we have to remain a bit flexible. But for now, this wave count has worked out and we are grinding higher towards our target, which is still between 85 and 96 cents. That hasn't changed. Also, yesterday's dip hasn't changed anything. We've only moved into the yellow support zone, which was already on the chart. We broke the initial micro support, however. But yeah, that was the signal that probably a deeper pullback is unfolding, but we're back to 71 cents. So let's explore what's going on here. So the idea is that a fourth wave bottomed here on the 23rd of January. We have a 5-wave pattern to the upside. At least we can justify that. 5 waves up from the 23rd of January low. I consider that only the A wave of a larger 5th wave. So the move down was a B wave of a larger 5th wave, and we could be moving in a C wave now of a larger 5th wave. So basically the idea would be A wave, B wave, C wave. This C wave would be a 5-wave move and would ideally reach 85 to 96 cents. Yeah, I mean, based on this structure, let's just check something. Because if we have 5 waves up in A, the move down was B. Typical target for C is the 100% extension level. And that would be actually just above $1. So maybe it will overshoot slightly above the 96 cent region. But again, they are only like current projections. Further extensions always possible. Now let's go to the 1-hour chart. Here I have actually started to label a potential micro count. Actually, I need to move that all to the right a little bit, or we just shift all of this to the left. Yeah, let's just do that. The idea is only to track right now if we get these 5 waves and what the parameters are, because we've seen a dip into the area and a, let's say, fairly sharp reversal to the upside. Could this be already, yeah, basically this 5-wave move up? Yeah, I mean, absolutely. It's possible to say that this was a 1-2 in which the 2 was very shallow. This could be another 1-2 setup within wave 3. Wave 3 should minimally reach 84.8 cents. Ideally 87.3 plus. And yeah, further extensions are always possible. And the longer the 3rd wave is, the longer the 5th wave will likely get as well. So it would shift all these targets a little higher eventually. What is the invalidation point? I think that is very important. What's the invalidation point for the idea that we're already moving in a 5-wave pattern to the upside? It is here, 66.5 cents. The low of the wave 2. So if we see a break below the low of that wave 2, it would indicate that possibly we are heading back into the yellow zone or something different is going on, but that this immediate, straightforward 5-wave pattern is not unfolding. We have reached here possibly temporary resistance, Fibonacci resistance it is, and that's the 61.8 extension level. Now that's at 75.3 cents. We need to overcome this level to grind higher. Typically, the 61.8 extension can be a target for a wave 1 of a larger 3rd wave. So that's why this could be a 1-2, 1-2 setup that I'm watching. Yeah, I haven't labeled it because, to be honest, I've run out of wave degrees as well. Because of the, yeah, just the wave degrees. We can change that. But then the nanostructure changes frequently anyway. It doesn't really have any additional value, you know, for me to label that as another 1-2. Doesn't make any difference. I could do, just to show you, 1, 2, 3, 4, 5, like that. Okay, that would be ideal. Yeah, that is what we would need to see to form the wave 3. In that case here, this would really be a nano support, but really, really nano support. So between 68.4 to 72 cents. Here it would ideally reverse. Now that's really just something for scalpers, not really of much predictive value. There's a lot of intraday volatility that can lead easily to invalidation here, but that's what we need to see. Ideally, it's holding 68.4 cents. Any break below that, 66.4, 66.5 cent level will lead to invalidation and would indicate that, well, this was only an A wave down. We're doing a B wave, and this is a C wave down. And then we could move up from there. So basically what it means, in simple, the orange box is relevant. Below the orange box, the yellow one again. And below 50 cents, it could get quite ugly. Because then we're basically moving down too low for this scenario. And the question would be what then happens. Then we would have to explore if the entire 5-wave move up from the June lows is already being corrected, leading to a much deeper pullback. Nothing I'm primarily watching for at this stage. So that should give you very clear parameters to watch, upside targets and micro support levels. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.